Welcome to my channel where we simplify complex topics for you. Today we're diving into the world of federal tax rates for individuals. Understanding how federal income tax works can help you make informed financial decisions. So let's get started. Hi, this is JW. I'm a CPA working as a financial and tax consultant to support small business owners and individuals to achieve their financial goals. I provide a number of services to my client, such as tax preparation, tax planning, financial consulting, payroll services, and bookkeeping services. In addition, I teach accounting-related courses to graduate students at a local private university. I love teaching and sharing what I know. That is why I create this video to help you gain some basic understanding of taxes. To begin, let's discuss how federal tax rates work. The U.S. federal system is progressive, which means it's based on income levels. There are different tax brackets, each with its own tax rate. The more you earn, the higher your tax rate. According to World Population Review website, here's the top 10 countries with the highest income tax rate. Top 3 countries are Ivory Coast, Finland, and Denmark. Here is the federal income tax rates for tax year 2022 for taxpayer filing as a single. Keep in mind that tax rates may vary depending on your filing status and income, because federal income tax rates in the US are progressive, so your income can fall into more than one tax bracket. So, what does this table mean? Income up to $10,275 is taxed at 10%. Income from $10,276 to $41,775 is taxed at 12%. Income from $41,776 to $89,075 is taxed at 22%. Income over $539,000 is taxed at 37%. When you file your federal income tax return, one of the first decisions you will make is your filing status. The status determines how your income will be taxed. There are 5 common filing status: single, married filing jointly, married filing separately, head of household, and the qualifying widow and widower. To calculate your tax, you apply the corresponding tax rates to each income range and add the results. We'll take a look at example in the next few slides. You probably hear about marginal tax rate and effective tax rate. How are they different? Let's take a look at it. The marginal tax rate, often referred to as the marginal rate, is the tax rate applied to the last dollar of income earned. In other words, it's a rate at which your next dollar of income will be taxed. The U.S. federal tax system is progressive, meaning that as your income increases, you move into higher tax brackets with a higher marginal tax rate. Marginal tax rate can vary depending on your income level and the filing status. The effective tax rate, sometimes called the average tax rate, represents the total tax you pay as a percentage of your total income. It takes into account all the tax brackets you fall into and the corresponding tax rates. Your effective tax rates provide a more accurate reflection of your overall tax burden. It is calculated by dividing your total tax liability by your total income. Let's take a look at an example. For taxpayer with single status and taxable income of $55,000 per year. Let's start calculating the tax owed with each tax bracket. On the first $10,275, it applies to 10% tax rate. On the next $31,500, it applies to 12% tax rate. On the remaining $13,225, 22% tax rate will be applied on this portion. And then calculate total tax liability by adding all this tax amount among different brackets. And the total tax liability is $7,717. A marginal tax rate is the tax rate that applies to your last dollar earned. So in this case, it's 22%. To calculate effective tax rate, divide total tax liability by total income. In this case, it's 14% tax rate. Understanding both your marginal and effective tax rate can help you make informed financial decisions and plan for your tax obligation more effectively. Your marginal rate indicates that rate applied to your next dollar of income or last dollar of income, or your effective rate gives you an overall perspective of your tax burden. Always keep accurate records and consult tax professional. I hope you have a better understanding of the tax rates, and stay tuned for more insightful contents on personal finance and taxations. Enjoy learning.